But this is where things get hard, because if you're in this category, right, you're not making a lot of money, you have a ton of debt that you can't pay off, and so it's like, what down payment? Where am I gonna get the money from? Hey everyone, it's Ben Hardy here, and in today's video, we're gonna be talking about getting a car loan when you have bad credit or no credit whatsoever. I think the best way to go over this topic is to lay out a few different scenarios. And so with all that being said, let's get into the video. So let's go over the first scenario, which is assuming that you have no credit whatsoever. This is what is known as a ghost. It means you've never had a credit card, you've never had an auto loan, a mortgage, nothing, no student loans, you've never had anything hit your credit. So if your credit gets pulled, it's going to show absolutely nothing, hence the term ghost. Now, if you want to get approved for a car loan and you do fit into this category, you need to have a few things. First off, you need to have stable employment, preferably with an hourly wage, not a commission type job. If you do have a commission type job and you've never pulled out any sort of loans before, then you're going to have a little bit more work history. If you have an hourly wage, then typically you only have to have about 6 months of job time for lenders to consider you. But if you are on a commission type job, then usually they want at least a year, if not 2 years of job history for them to really feel comfortable with giving you any sort of loan if you have no credit. And then aside from having a stable job, if you want to get approved for a car loan, you typically need to come with money down. Now, you probably are going to want to have at least 10, if not 20% down in terms of the vehicle's value. And since you are a first-time car buyer and you have no credit, you're going to be purchasing a car that's pretty inexpensive, so that 10 to 20% down isn't going to be a ton of money, because most of the cars you're looking at are going to be between the $8,000 to $12,000 price range. So think you're going to need at least $800 to $1,600 down on the low side, and then on the higher side you're going to need $1,200 to $2,400 down. And that's, again, typically the car range you're going to be looking at. The reason it's going to be within that price range is it can't be super expensive, because they're not going to want to give you a very high payment. They're going to want to give you a lower payment so they can prove that you're actually going to pay on stuff. And if they give you a monstrously high payment, that's going to be difficult, right, for someone to pay that's never proven they can even pay stuff back credit-wise. And then aside from that, the other reason it's going to be in that price range is typically you can find cars in that price range that have low enough miles and a new enough model year that it's not going to be a complete disaster from a maintenance standpoint. And lenders do look at this. They don't want you to be taking out a loan on a very old, unreliable car. They want it to be newer, lower mileage, so that there's less of a chance of something breaking, because they know if something breaks in that car and you can't drive it anymore, it's unlikely you're going to make the payment on it. And so that's kind of why it ends up being within that price range, is to be within a lower payment range for you, but then also to kind of be expensive enough that it's a new enough car that's reliable, all that kind of stuff. And so again, if you have no credit whatsoever, you want to make sure you have a stable job, and you want to make sure you have some money down coming into the situation. And then just understand that's going to be the price range most likely of the cars you're going to be looking at. And I guess the last thing I'd say is you need to be open to options. You can't come into this expecting to get exactly what you want vehicle-wise. This is just kind of like a means to an end. This is the car that you get that allows you to get other cars in the future, because it is a credit-building vehicle. And the next situation we're going to get into is people that do have credit, but they have bad credit. Now, there's a ton of different categories that I could split this into, but I think it'll be best if I split it into two main categories for today's video. And if you guys feel like it's not enough information and you want something that's a little bit more detailed, then I can make further videos and kind of split it up into even more categories. But let's just try to make it somewhat simplified for today's video to start things off. So first off, you're gonna have people that have bad credit and low income, and you're gonna have people that have bad credit and high income. We'll start with the low income and then go over to the higher income. In this first category that is about people that have low income and bad credit, typically how this would happen is it would be someone that just wouldn't live in the same place all the time, because they were also job hopping, and because they're getting jobs that are different all the time, and because they're moving from places all the time, the amount of rent that they're paying changes all the time, the amount of income that they're making changes all the time, so it's hard to actually budget for a particular lifestyle. And then usually throw in some student loan debt on top of that, and then the credit score just absolutely tanks. It's still possible to get a car loan, but typically with these people, it took some lifestyle changes for them to build up to be able to get a car loan. Usually when I had customers like this, I had to work with them over a longer period of time. So what you want to do if this is you is, first off, find stable employment. And again, typically lenders prefer an hourly wage. If you are going into a commission type job, yes, you can potentially make more money, but understand you might have to wait a little bit longer before you can get a car, because they want longer employment history to see how much you're going to be making over a long period of time with that commission type job, whereas an hourly wage, right, pretty straightforward. So stable employment, preferably hourly in this case. And then obviously you want to have stable residency. Lenders don't like people that move all over the place. They want to see stability in this person's life, because from a lender's perspective, if they're going to give you a loan for 4, 5, 6, 7 years, they want to see that you're going to be there to physically pay and everything. So stability is very important to these lenders. And then also, when you actually are going in to buy a car, bring some stuff, right? Bring your pay stubs, proof of income. And then you're also going to want to bring proof of residency, typically in this situation. And down payment is preferred. Again, just like the first-time buyer, the ghost that doesn't have any credit. Again, if you have bad credit, lenders typically want something from you, because if you don't put any money down, that's no commitment from you whatsoever. You could get the car loan and then never make a payment, and you didn't lose out on anything, right? Your credit's already crappy. And so if you have a repossession on your credit, it's like, whatever, my credit's already in the toilet. I don't care that there's a repo on it. And I would see that all the time, right? These people would just go and they would get these dealerships to give them cars, and then they'd get all these repos on their credit. And again, they didn't care because their credit was already horrible. And so, again, what they typically will want is some sort of commitment in the form of down payment from you. But this is where things get hard, because if you're in this category, right, you're not making a lot of money, you have a ton of debt that you can't pay off, and so it's like, what down payment? Where am I going to get the money from? And so that's the hard part with this particular category. And usually what ended up happening is people would put money down on credit cards. I'm not recommending this. I'm just saying that's what these people typically had to do to actually get approved for these cars. It was always a super difficult circumstance, but it can be done. And so if you're in that category where you're lower income and then you have bad credit, just understand that you need to put as much stability in your life as possible so that you look good to the lender. Money down is always welcome, but again, I understand it's difficult, right? You're in that situation for a reason. It sucks, but that's the first category. Now the next category is high income earners with horrible credit. And a lot of people might be scratching their head going, wait, if someone makes a lot of money, why would their credit be bad? And the thing that we'd always say at the dealership is eat big, shit big. It's kind of a funny phrase, but there's a lot of people that make a lot of money and they spend a lot of money. They spend all of their money, and it isn't that uncommon. And so typically what this person would look like is, again, they'd have obviously high income. And so usually they were in some sort of professional type job, or a lot of the times they were kind of like entrepreneur type people. That's what I saw more often than not, is they were business owners. And so usually they would have a house, they would have a mortgage, but then they would just have massive amounts of debt because of all the toys that they bought and because of all of the crazy stuff they did associated with their lavish and expensive lifestyle. And yeah, it did make it a little bit harder to get a car loan, but it was definitely still possible. So with these people, again, just like with the other categories, typically lenders were looking for stable employment. And again, most of these people were entrepreneurs, so we typically the lenders, typically wanted these people to have had a business open for several years so they could really see what that income history looked like to prove these people are making as much money as they say that they are making. So proof of income, typically over a longer period of time. And then just like the other categories, down payment is preferred. And I guess the one thing that's unique about this category is because these people typically had mortgages, the lenders were more likely to give them loans, because then they understood that these people are like settled down and they're probably going to make the payments on the car because they don't have any, they're not going to just disappear, right? If someone is renting and let's say that they haven't made any payments and their car's about to get repossessed, like those people sometimes literally, they just get out of Dodge, right? They just run away, they just disappear. If this person has a mortgage on a house and everything, they're kind of settled down, they're not going to run away anywhere, so they're more likely to make payments on a car. And so lenders a lot of times would not only lend out more money, so they'd let them buy a more expensive vehicle, but they would actually get a higher percentage of approval rates with these people. And then again, money down always helps, and it was usually easier to get money down out of these people. you couldn't get as much money down as you'd expect based on their income. Like I had a customer come in that I think he made like $20,000 a month or something like that, and it was like pulling teeth to get him to put 4 or 5 grand down on this truck. And it's like, dude, you make that in a fourth of a month, and you're telling me that you can't put down in a car. And I get it, because the dude spent like all of his money on all sorts of crazy stuff. And so if you guys notice, there's a trend between all the categories, right? They want to know where you're living and how long you're going to be living there and how long you've been at your job, right? They want stability with your living situation, with your employment situation, and on top of that, they want proof of that, right? And then they want you to also typically come with money down. They want some sort of commitment from you as well. And that pretty much goes across all lines, but there are some few differences that I mentioned with all the different categories throughout the video. Now let's kind of sum things up for today's video, and you guys probably noticed a theme across all the categories, right? Stable employment, stable residency, proof of that, typically down payment. Now I didn't talk about interest rate. You have to have this expectation you are going to get a higher interest rate. I will be making a separate video about interest rates, especially regarding people with bad credit and kind of what you should typically expect. But I guess the proper expectation to have if you fit in any of these categories is just understand that you're going to have to provide a little bit of information to help out with getting the loan process going. You're not going to get the best interest rate, and you're not going to get exactly what you want vehicle-wise typically. It's going to be kind of like a gateway vehicle. I hate that word, but I don't know what other word to use. It's going to be a gateway vehicle to other vehicles, right? This is the vehicle you buy to be responsible and build your credit, so then you have good enough credit to get exactly what you want next time. And if you go in it with that expectation and you make all your payments on that vehicle and get it paid off, and obviously fix everything else in your life, which I probably need to make videos about that too, then it'll obviously help you out in the long run. But with all that being said, that is pretty much everything for how to get approved if you have bad credit or no credit in the different situations. If you're stopping for the first time, I'd really appreciate it if you would subscribe. And again, if you feel like my videos are of value to you, I'd really appreciate your support over on Patreon. Link in the description down below. I'll see all of you in that next video.